This is Justin Pulitzer. This is my weekend review video for Sunday, April 9th, 2017. A decent amount to discuss. I'm going to start out quickly with some macro issues, talk about the 7 to now 10 market keys, the major market indices via their popular ETFs, get into some of the momentum stocks, and then we will call it a wrap. Anyhow, let's get cracking. So I drew this wedge in here. It's been in here for a while with the VIX. And obviously the VIX is kind of due for a bit of a rally or a bounce, and it got it. We've gone through periods of time where you have these spikes, but in general, volatility has trended lower. We're starting to make some higher highs here and starting to challenge this kind of 13 level. It has been unsustainable to the upside, and the 200 MA has proven to be quite formidable. However, we are above some of the major moving averages, the 50 MA, the 100 MA, the 20, and the 10, although I don't put all that much stock into these because they've come down so far so fast. But if we were to get a spike up, the downtrend line is now down to 17. So to me, that's sort of like your max fear gauge in my view. I don't think we, at least the first time around, there'd be much sustainability above it. That being said, we're just in a consolidation mode, and I guess a mild drift up in terms of VIX. I don't make too much of it other than people probably trying to pick tops, and more than likely, it's more about the place on the calendar. We just had the end of the first quarter. People are repositioning or adding positions, and they're probably just doing a little bit of protection. Nothing wrong with that. This has potentially got some problems going forward. This is the dollar, the Dixie. So check this out. We have a bit of a head and shoulders pattern, and here was our neckline. And you had a gap down that was a look below and fail, and now we're coming up. So we're getting kind of close to where this needs to stop. If we start getting above the trend and above this right shoulder, that to me means the dollar is going to have some legs, maybe potentially up past these highs. And I think that would get the attention of the market. I don't think the market would appreciate that all that much. In UUP terms, that's the ETF for the dollar, you can see we're right on it. So we're right on the downtrend. We kind of came up from the bottom, so it wouldn't surprise me if this were to if it were to try to break out, but it wouldn't be so clean. The worst thing here, in my view, would be for this to kind of consolidate and then go. So it came up from the bottom, got to the downtrend, and just kind of consolidates and then goes. That to me would be something that could be a go with. Here, I always assume that the trend holds until it doesn't, so we're kind of close to where the dollar really needs to back off. If not, that may start becoming problematic. I think that was a little bit relevant in terms of the metals this week. I've been pretty pro metals. I've thought that the risk has been higher. I've noted we had these double tops and just this kind of mild consolidation. But we had this look above and fail on news. Obviously, this was the Syria stuff, the Syria biz. So when you have a look above and fail, you tend to rotate to the downside of the range, which to me would be probably closer to the 50 MA, maybe even 100. I don't know, but that's look where this really broke down from, and it hasn't really been retested in a while. So for the time being, I don't want to make too much of Friday's range. We do have a trend from this gap, so until that breaks, I don't really want to get too bearish. If that is to break, though, if you're really aggressive, I think below Friday's low, you can try as a right or right out short, and I'd be more interested really on this kind of break of this trend line for a filling up of the triangle down to maybe even to the gap fill here in the 116s. If we were, let's say, to get above the 200 MA here, and this Friday look above and fail, then I think the play is to the more primary downtrend line up here, which I don't know why it's grayed out, but it should be red, would be up to the 124s. Look where this kind of topped out, really the top of the range. So like I said, if we're aggressive above the high or short below the low, but I really am more curious to see if that downtrend breaks. Silver 17s are a very key area. This was a bigger bar. 50 MA is coming up, and the kind of the fill. Silver tends to lead gold. It's like the more levered play. This never got above the range, so that tells me that there could be some more weakness in the metals short term at least, because silver needs to be the kind of the leader. I'll get into that at a later point, but we are still above the downtrend. If this is to pull back, I'm just thinking a retest of the backside. Like you see how this was a gap up? I think that it would be kind of a backside of the old downtrend test, and then that to me would be a level I'd be interested in kind of buying the dip. But overall, longer term, I'm bullish on these. Shorter term, I'm a little bit more concerned. The bonds are a rallying a little bit. Look at this. This was a kind of another one of these safety plays. It was a bit of a look above and fail. It didn't quite even get to the backside of the old down channel and where we got to the top of the range. If this were to drift down, look at this. You got a lot of moving average confluence here. You have the 100, the 50, and the 20 here. So this is also the lower end of range. So I think this area is okay if you're playing long bonds, as long as that holds. If you lose that, it could fall down to the lower end of the range. So I'd be cautious if you lose like this 120, 21, like this area, basically 120s. That needs to hold. Anything above this high here could set up for a bit of a breakout. But look, this was a look below and fail, so it makes sense that we'd come up to the top side of the range. The best thing this could really honestly do is just chop or have a mild pullback and then go. And then I think you could see like the 127s. So that's what I'm looking to see, if these moving averages can hold or if we can eclipse these highs. It's been consolidating for a while, so a move above there to me I think could go. High yield. Now, everybody wants to, I don't know, everyone seems to want a crisis, right? It's hard to get a crisis without high yield really getting a move down. That being said, a couple of things I'm seeing. One is we snapped this trend here in dramatic fashion. This to me is just kind of like we had this gap down. It's just been chopping. You have the gap fill. It's holding the 50 MA. I don't really get too concerned on high yield until you lose the 200 MA. You could see you had double bottoms here. If you were to lose these double bottoms, then I think that there could be a short down to 84s. But this just seems like it's in a big chop range, in my opinion, like this. And this can persist for a while. I usually don't like to trade HYG, although I've had a pretty stellar record doing it. But until I really have like confirmation of a move. Like look here, this was the move down, the move up, and then the move down. Look what happened here. You had the move down, the move up, the move down, but no follow through, and now we're up. So this is almost like a W pattern with a cup and handle. So you could look at it a few different ways. I would put a buy stop in though above, if you're short, number one, you want to cover over 87.90, or if you're looking for a momentum long, I think over this would take it up quite a ways. Alrighty then. Oil. That's also why this has been holding up. Let me zoom in here. This is such a mishmash chart, right? Held 61.8, bounced to the kind of the breakdown of the range, rolled over, had a look below and fail, another look below and fail. You had all these cattails down here, and then once you broke trend, it was off to the races, and look where we kind of stopped, the backside of the old uptrend. That makes a lot of sense to me. I think oil is going to just hang out and chop here for a bit, but as long as it's above this like 50, 100 MA confluence, I think the risk is up. As long as it can hold 51s, and anything above 52.22 is even still more bullish. So like I was saying with the other one, this is run a lot from the basically to where the breakdown was. The best thing this could do is really just chop sideways for a while and then go if it's going to be bullish. but we are now mid-range, and this, to me, the risk of owning it, the place to buy it here was, remember, we talked about over this high, and it's played out. So I'm a little cautious, but I'm cautiously optimistic as long as it holds the 50 and the 100 MA. So many people think down. I think oil is just going to kind of hang out and remain kind of elevated because the Saudis want to do the Aramco IPO. So that's kind of my view on oil. XLE, we get a lot of discussion about XLE. Look at this bad boy here. Yeah, a little better there. Look above and fail, but the back off has not been very dramatic, and we're kind of just riding below this 200 MA. So what does that mean? I would put a buy stop in above this 71, like 71.5. If that were to break, we could float up quite a ways. But if you want to be, let's put it like this. If you want to be aggressive, you could first buy over the 2-day consolidation here, which is 70.86. If you're more conservative, you could do it over the 71.49, which is 71.5. If you're looking for the short, these three, this is the look above and fail bar, so you'd be putting your entry below 69.97, and then that short to me would be a retest of the lows. But this has been in a channel. It's been trading fairly consistently. And I don't necessarily know if we're going to get all the way down, but these reference lows down here to me seem possible if we lose this this low, this 69.97. So that's kind of how I want to play it. XOP, another one. It kind of looks the same basic setup. I don't want to go over it too much, but in this one you'd probably want to use 36.68 as a stop, or if you're long, or as an entry short. And any move above this 250 MA confluence, I think, would be back to the long side. Exxon Mobil. This is a bit of a head scratcher for me because I had been shorting puts all in here, and then I added on this day when you got the break of the downtrend. And look at this. This was on big boy volume. A break of the 50 MA and a move up. And then the next day was crappy down. Then you had these two cattails up, and now we're kind of just consolidating over the 50 MA, which is good in my view because we're consolidating above the downtrend and above the 20, the 10, and the 50-day MA. That to me is very important. As long as you hold there, I wouldn't add to this again unless it breaks over 83, 87. In that case, I think we'd see the 100 MA and maybe even the 200 MA up, but I am an interested put seller on moves down in Exxon. I think that it's moved a lot, and this area has a lot of memory. The IBB, this is the Biotechs. Look, you just got to move up here, a double kind of a look above and fail, a double top, and now it's pulling back. This is the trend, and you have 100 MA right here, so it kind of bounced ahead of where I was looking for, and now it's right at the 50. On a pullback, so what I'm thinking is on pullback, somewhere between the 100 and the 200 MA, I'd probably be in the mood to maybe sell some near-dated out-of-the-money puts down like around here, kind of by this regression line around the 270s, or buy it on momentum on a break over the downtrend. Like you could see, this hit the channel high, then it hit the channel low. On a break of the downtrend, I'd be a buyer. Gilead. So someone was asking me the other day if this was a short, and I think, look, this has been a ugly, very long protracted decline. But check this out. This made lows, gapped up, and then has been spending all of this time coming down. I think it's actually a buy at or even on a violation of these lows for a short-term bounce, particularly coming into earnings. They've muffed it so many times. The stock is down so much. If this just keeps going down, I'd love it to make fresh lows into earnings, shake out all of the bullshit in here, and then it probably could rip on earnings. If they rally it ahead of earnings, I'd be very leery of first chasing it, and then I'd wait for the earnings, because if the gap is the move up, it could be a professional gap and have quite a ways to go. So a bit of a change for me. I'm looking to buy Gilead, but I either want to buy it lower into the print or higher on the print, if that makes sense. Excuse me. All right. IYT, the transports. This is what kind of led the rally up here. We hit the channel high, and now it's pulling back, and we had to look below and fail. Now we're maybe trying to form a right shoulder. If you start losing 161s again, I'd be very cautious because, look, you have a trend line here. And if you lose that, it could really come in, the channel low could really come into play if there is going to be like, I don't know, a summer correction or whatever we're looking for. Let me get rid of this. No, I'll keep that for now. The 61.8 to me would be an area of interest, particularly coming from an all-time high. One of the things that, like I said, this trend to me is very important. It was a look below and fail here. If it starts going again, then this could be a problematic situation, and we could be looking for a retest of the breakout here around the 145s and maybe even the channel low, where I would be very interested in buying it. So just watch this trend. If you lose it, I think you could short. Let me get that oval out of there. That was really for where I thought we'd be bottoming. And the 100 MA has been trouble. So if you're short, you could use the 100 MA, a close or a sustained move above the 100 MA as a stop. Or if you're looking for a long, I think you could use that 100 MA, a sustained move above it as a long. The proxy I like for this is FedEx. This is showing a lot more regular strength, but look, it's just basically ping-ponging in a range. If you're looking for a short, it could be a little tough because you've had some defined lows and you have a quickly approaching 200 MA, which is, look, this was where it gapped above. Moves below have not been sustainable, and it hasn't been retested in a while. So I'm thinking that this, even if this does roll over again, 3 times might not be the charm. It could have a bounce to a lower high this time, though. But FedEx to me looks like it's just in a big consolidation mode. If it were to lose this low, I'd basically be looking to double up the range and protract that down, maybe even to the trend line. So I'll do a little more analysis on FedEx if that were to take place. Copper was the other kind of general here, remember, in the move. Still nothing. It's just kind of in trend in this wedge, right? It's sort of trying to look below, look above, just consolidating. Anything below the 50 MA, though, to me remains a little suspicious. If you're looking for a long, wait for a move over the 50 MA. Freeport is sort of like the stock for copper. This was a look below. Look, the 61.8 touch, you had to look below and fail, and it rallied up. Again, 50 MA was very key, so cautious until it clears the 50 MA here. The financials. This has been a powerhouse, right? Look at this bad boy. Up, up, and away. Consolidating, pulling back. Anything below the 50 MA, though, to me remains a little suspect. If this were to fall all the way back to the channel low, I'd be loading up the boat because, look, that's where the breakout was. This, to me, would be very key. It would take back most of the rally. I think you could use this kind of reference area, this low, 22.98 to 22.85. Anything below there, to me, is probably a short. Yeah. If you get back up above the 50 MA, you could try long again. Same thing in all these stocks. They all look alike. JP Morgan kind of broke the channel, tried to retest, and now it's kind of just gently coming down. I'd be an interested buyer around the channel low, somewhere between 78s, the backside of the old consolidation line. 2 times the range from the up would take you down to like 77, 88. So somewhere between that and like 80 to me would be interesting. So JPM, if it gets back up above the 50, I think you could buy it, or lower, really. Again, just ran a lot and pulling back. Goldman Sachs, same kind of chart. I was looking for a little bit more of a rally to short it at the 50 for a head and shoulders setup. This could be a move to the channel low. Look, we bounced off the backside of the old up channel, and now it's accepting price in. That to me usually means a bit lower, but I'd be a little cautious with this. It's kind of taking its time. So if you're looking for an entry, though, right or right out, below 225.57, that's sort of like these reference lows. I don't think I would give it even to down here. So these I would use, and then I'd probably use a move up over the 2-day highs of like 230.12 as a stop. If we were to get back up above this day's high, though, the 232.89, I think it would probably make that move up to the 50 MA. SPY. I forgot to talk about the macro stuff, so maybe we'll do that now before we get into SPY. All right, this week we had a Fed deal and the minutes. I want to preface the minutes by saying the minutes led to one of the most dovish actual press conference Janet Yellen has ever given. So I think a lot of people made more of the minutes than needed to be. I think this is what freaked out the market. That was the other day, right? We had the Fed basically mentioned that they don't expect much in terms of tax cut or stimulus in 2017. They're expecting it in 2019. Then they hit the market with this sort of talk about maybe reducing the balance sheet later this year or in 2018, which is basically a de facto rate hike, and the market didn't love that. And then Speaker Ryan talked about tax reform maybe taking a little longer. So those were the kind of the macro effects that impacted the week. That was this kind of day. So let me just talk about SPY here for a minute. It's been in a sideways to down consolidation, and now we've been kind of perking our head up. This was a look below, look, the 50 MA was key. This was a look below and fail on the 50 MA, so we basically were coming back up to range high. I thought we might see 238s, but we only got 237.93. And then we've been just kind of consolidating in that range. The 50 MA has been holding. The 20 MA, though, look at this, was the support. Now it's become the resistance. So I'll say this. If you're looking to be aggressive, you have 5 days of consolidation, really 4 days here with the 50 MA right below. I think you could use a short. You could do a short below that low of 234.43. My target would probably be close to the 100 MA, because if you lose the 50, I think we see the 100. If you're looking to be bullish, I think you could buy stop over 236.04, because that would be a move over these 2-day highs and the 20 MA, and then I think we could kind of rotate back up to 238s, maybe even 239s. We're still riding basically the lightning here, the channel low, so there's really not much to see in terms of a short until you lose the 50 MA. So I want to be long above the 2-day high or short below the 2-day low, basically, in SPY. IWM. A lot of people keep messaging me, am I watching this? Am I watching this? There's nothing to see here yet. This is a very mild pullback. It is below trend. I'm sorry my chart's a little messy. This is one of the ones I really use. I have a lot of proprietary levels in here, but look at this. This is really just still in range. You've had 2 look below and fails, a move back up kind of closer to the highs. The backside of the old uptrend failed, and now we're pulled back a little bit. Until you lose these lows, and if we did, I think we would rotate down to a fib, maybe the 2 times the range low of 127s, and look where the 200 MA is, roughly around there, which could be, depending on how long it took, the channel low could hold. So until you lose these lows, there's really not that much to see. It is noteworthy that the 50 MA failed and that it's struggling also at the 10, 20, and 100 MA confluences. So if you're short, I think you could use a stop above this 137.43. If you want a long, you could put the same buy over that high also. That's kind of like the day that the day the music died, so to speak. I don't really have much more to say than that. This was a breakdown of the channel, a check back, and it's coming down. It's bearish, but it's not crazy because we're still in the context of the range. I don't know if we looked below it again if it would hold. So you'd really want to. I think this is really where the stops live, below these lows. If you're really aggressive, I think you could use 133.83 as a tester. Alrighty then. Qs. This is a look below, above, and fail. The back off has been rather minor. If there were to be a pullback, I would just think channel low to 129s. The 50 MA has been key, and that's also this kind of range low in 129s. So there could be a pullback, but I think it might be short-lived. Basically, we looked above the range high, we'd rotate down to the range low, which has been defined in this area. If we were to lose that, I would reassess the situation. A move above this high would just be the same old business as usual move higher. This was a new all-time high, but it was a look above and fail. And you have these multiple days. It's sitting right on the 20. So if you're aggressive, you could short below Friday's low for a move down into those 129s. A move above the 2-day highs, I really wouldn't want to mess with it too much. Speaking of which, the Qs are very dependent upon Apple, and I want to kind of discuss something with you guys. I've been trading a while, really a long time actually, and Apple is something I've traded and followed for, I don't know, a multitude of years. I was a really big fan of their old CEO, Steve Jobs. It's actually one of my all-time idols as far as CEOs go. He was a truly unique and special man. And Tim Cook, I guess, has been a little more lackluster, but the stock has performed well. Anyway, that being said, this day to me was a breakout of range, and this day here should have been a gap up with the market. Instead, it was a gap down. Now, Apple did make a new all-time high that day, but something funny bothered me. There was a gap. There was a gap down on a bullish day, number one, and it was on a downgrade. Now, I've seen this story, this play before. I've seen it many times, and anytime I've ignored it, I've always paid dearly for it. And this was not going to be one of those times. So what I did was I knew not to panic. I waited for the gap fill, and then maybe even a little sum I talked about, and I booked it at 145 plus. I also saw in the options that 145 to 146 was going to be a lot of resistance. So what does that mean now? We have Apple earnings coming up. This has run a heck of a lot. This was really where this rally began, low 180, really 104. Off the channel low, and we are way above it, and we haven't even checked back. I do think that the first check back, whenever it does occur, would be a buy. But I will say this. I use this opportunity to get out well. And now I'm going to probably sit on hands and wait for earnings. If Apple were to make the 1.618, I just want to show you, it would be up to 162. So there is room if Apple wants to keep going. It's not by any means, crazy out of control, extended. It's done this in a very kind of, it had a lot of consolidation here. This day to me was a bit of a game changer because it took out this high. This was a look above and fail. It took it out, and now it's really, honestly, still just bull flagging. As long as this holds this like 143s, really the 20 MA has been the key. Look at this. It couldn't even get to it. Here was a look below and fail. Until it loses the 20 MA and this like uptrend from the gap, there's really nothing there as far as being bearish or short. If it were to lose that, we could come back to this kind of trend line and maybe even the backside of the old channel. So if you are bearish or you want to put on some kind of hedge, I think a put spread would be good now because they are super cheap. IV is super low in Apple. Anything below 25, 26 is low IV in Apple, by the way. Above that starts getting elevated, and when it gets into the mid-40s, it's super, super expensive. That being said, just be a little cautious with Apple. If Apple keeps pulling back, it could put pressure on the Nasdaq. And I would, though, be a buyer of the backside of the old up channel the first time, particularly after so many days up. 50 MA could also be a point of interest. Look where that is. That's right where this kind of range low is. So again, if Apple gets up above 145s, it's probably going to just keep going. If it does pull back, I've given you some things to watch. If the 20 MA can hold, it's still healthy. If it fails, I think we would see the 50 MA and then this channel low around the 137s at the least. Microsoft, 50 MA has been, I think, kept a lot of people out of trouble in this stock. I know a lot of people have been wanting to short this thing because it's up so much. Until this loses the 50 MA, there is no short. If it loses the 50, I think you could try a right or right out play. Until then, it's just kind of one of these like chop and grinds. Amazon. Talk about a bullish stock. A couple of things. First and foremost is this had a very defined channel. It broke out. You had a bit of a topping tail, and it's now kind of back into the channel. The 1.618 fib extension for me was 931. It's still possible we get there. But to me, this was starting, the risk reward was starting to get a little iffy. And when you have a topping tail, anything now below 905.62 to me is a little iffy. If you get back up above there, it would firm. Amazon, the best thing Amazon, for me, at least at this point, because I did discuss booking some profits into these moves. I'd be looking to reload maybe at a fib. Maybe the 61.8 of the range, because look, 867.96, and this breakout here of like this high, I believe, was 860.86, somewhere in there, I think would catch it, and maybe by then the 50 MA would catch up. I'm down to buy Amazon on dips to the 50 MA until that trade fails. The real risk would be, of course, for this to get cascadey down to the channel low, which again, look, at this point, by the time it got there, would be near the reference lows, and I think would set up for a good out-of-the-money put sale or a right or right out trade. In the meantime, until this really loses the 10-day MA, it's a tough short. If you're aggressive, I think you could sell some out-of-the-money calls above this high, because this high really should hold for a while now, because it was a big topping tail followed by a big body candle. I'm not, like I said, I'm not really looking. The trend in my view is up in this stock. I think it just ran a little too much, and I'm really honestly looking more to buy dips than I am to short. So that's kind of my spiel on Amazon. So any moves down or near the 50 MA, I'd be a buyer. Anything, anything down here to me would be interesting. I'd be interested in selling out of the money puts at the 50 MA at something around the channel low. Whatever strike that is at the time, to me would make a lot of sense. If Amazon does get above Friday's high, this 900.9, there could be a rally, maybe even to a lower high, like if you drew in a trend line. Maybe it gets it back up to like 909, 910. So for a right or right out trade, I like short below Friday's low or long above Friday's high for a quick, if you're on the day kind of time frame. Facebook. This thing is really run a lot. There's a 1.618, a little bit higher around 145. We got pretty close. This was a look above range and fail. If this breaks, look where it is. It's right on this trend line and right on the 20. So if you lose Friday's low, I think there's a quick potential play down to the 50 MA, which is kind of where this intermediate range low is. They have earnings coming up. I think kind of like your max pain move would be somewhere down to like 128s, 129s at this point, because that's where the 100 and the 200 would be living at that time. It's also where this kind of breakout was. So if you're aggressive, I think you could try a RORO short for a move down. My ideal situation, though, would be for this to shake out some of the froth. Look how this is just kind of moved up ahead of the number to play for a move back higher, because I don't think that this is really any kind of crazy significant high. To me, it's just a look above and fail. So I don't really want to do anything in this new with new money until the earnings. But if we do lose Friday's low, I do think that there is a quick play lower. Netflix. Right on that. Okay. I think it's right on the 100 MA, right? Yeah. I'm sorry, the 50 MA I meant. I've been waiting for this to kind of pull back. It hasn't done very much. It has earnings coming up. Again, another one I'd love to see, kind of come down and fill the gap for before earnings. I would think that would set up really well, but I don't know that we're going to have that happen. So as long as this kind of holds the 50, above the 50, I like long. Below the 50, I think you could try row short. Google. Lower high and a lower low. You got to wait to be above 860.59. This did hold the breakout, so I think if you want to play quick below 837.30, I think you could try short for a move down to the 100 MA and this range low. Above Friday's high of 845.88, I think you could make a play back up to the high of the channel. So that to me is a good right or right out play. Why would that be? Because this to me would be this to me then could be a higher low, and you'd be setting up in like a triangular fashion. You see what? Hold on. Oh boy. All right. That would be 824.30. See what I mean? This to me would be a symmetric triangle, and then you'd be looking for a break of the triangle, either lower for a short or above for a move higher. Yeah. So below Friday's low, I like for a right or right out short to the 100 MA. Above the high, I like for a long up to the downtrend. Nvidia. So I was really tempted to short this play here, but I didn't. Why did I not? Why couldn't I? I looked in the options, and have seen this play before, where options can either hurt a stock or it can help it, and the 100 puts were so much volume that I knew that the market makers would never allow them to be in the money, and I decided to wait. So, and here's another issue. The primary trend line is kind of quickly approaching. So any move down to here, I'm going to look to sell like 200 MA puts. So for a quick short, I think you could do below 98.41. If you're really aggressive, you could do it below 99.72, and that would take you down to like 92s. This low here, this reference low, was like 95. I think this area here is going to be congestion. I know a lot of people think that this is just going to fall apart and fill the gap. I do not think that will be the case. I think it's going to take for earnings to really resolve it, either higher or lower, but intermediately, I think somewhere in this area is going to hold it, and the primary trend is here, and the channel low is here, close to the 200 MA. So somewhere in this area of like 86s to 92s, somewhere in there, I think there was going to be an opportunity to sell out of the money puts below the 200 MA. But like I said, for above Friday's high, I think it could float up, maybe get the downtrend again and the 50 MA. But below these lows, I think could be a quick short down to the 92s. Tesla. Kind of nailed this one pretty aggressively. I said a buy over the downtrend. It got up to this kind of area, pulled back, held with double bottoms at the break, this real true breakout here at the 240, and then it rolled up higher. I've said anything above 265 would put 306s in play. It got pretty close at 304.88. So what now, right? Ving Rames, right? What now? Oh, that what now? I think 325 is possible. That's the 1.618 fib of the range. But look where this kind of stalled out, petered out. This was the old uptrend line, and it stalled on the back side of it. This is a classic play where you break over a high, everyone gets sucked in long, but they don't realize it's sort of like a progression line. It becomes almost one of those, but this is a bull flag. So if you're aggressive and you want to be short below 294.20, is a short, but anything now above this 304.88 I think could just keep going to the channel high and to the 1.618. So I'm short a lot of puts in this, and we'll be using stops if we start losing this kind of breakout of like 287s. I'll give it a little bit more room, but I do think up here is going to start finding resistance at like 218 to 225. That to me is sort of the time to GTFO. PayPal, one of my all-time favorite sell puts on pullbacks. This is a progression line here that has been a tough cookie to break. I do think that this stock is destined for a heck of a lot higher, and if anyone's talking about a stock that could be a takeout target, this would be it. 200 MA has been very good. The price has not been comfortable below there. The 200 MA is roughly around 40, which is roughly around the trend and roughly around the 50% fib. Do yourself a favor. If you want to be long this, sell 40 or below puts. I think that is the safer and easier way to play this bad boy. JetBlue. I'm long. Why am I long? Because look at this downtrend. Look at this move here. Right to the this is what I talk about. The consolidation with very little back off. Look at this. This was the range 2060. You broke out of it, and you've just been like chopping below there, and now you're making a move again above the downtrend line and above this high. This should float up to like 22, 23s. I have a risk reversal call spread in there. I think I'm short like 19 or below puts because look where the 200 MA is. And I'm long, I think, 21 23s or 20 23s, something like that. I think higher. I would be loath to be... I might stop out of that if we were to lose like, I don't know, 2031 at this point. I might even move that stop up. I have to really do a little bit more work. But looky here. After the gap down, moves above the 100 MA have been very hard to sustain. So we're above it. If you're very short term, below the 100 MA, you could stop out. I don't think this is a short, but I do think that I do think it's going higher. I'm a JetBlue fan. And I will end on NetES. I got a few questions about this the last couple of weeks, and I kind of ignored them. Just because I've been busy. It hasn't been my prerogative. 130.82. Let me address this. All right. Why didn't I draw the Fibonacci from here to here? I could have, but more than not, this is really where the run started from on this leg, and I'm looking for a quick short-term bounce. Look where this trend line is. Look where it coincides with the 61.8 of the range and the trend. A couple of more things. There is a channel and a gap fill coming up, and I've often seen it overshoot gap fills. So I think somewhere between the gap fill and the 61.8, I realize it's a lot of points. So what I'd probably be looking to do is sell like out of the money puts somewhere at the 200 MA strike or below. And if this might take its time, it might come up to the 200 MA. So maybe the 78.6. I don't know. I have to go in and look at this as far as what the juice is. But anything below the 50 MA to me here, look where this breakdown took place. Look where this kind of rally took place over the 50. Anything below the 50 to me is vulnerable, maybe to the 100. So somewhere between the gap fill, the 100, and the 61.8, I'd be looking to sell out of the money puts. I'll keep it simple. Or do some kind of risk reversal with or an outright call spread. Right now, it's been holding the breakout, so there's no short here. If you're looking for a short, I think you could do it below 271.57 because, look, that's this, and then this is just kind of bear flagging above the 50 MA has been resistance. So any break now of this bar, the kind of the tone setting bar and like these multi-days of consolidation, you've sucked in a lot of longs. I think they'd be disappointed below here, and you could hold it for the gap fill. So that's two ways to play NetES, either short below here or long down into here. Listen, it's very possible this rallies. If you want, you could set a buy stop over 282.35, but I really only think that would be up to like 286s. And I'm really fine missing that. I'd be more interested in buying it on a bit of a move lower. So that's my spiel with that. Anyway, let's end it right there. I am looking to do my midweek review probably on I don't know, Wednesday or Thursday. Anyway, if you're not following me on Twitter, my handle is @JustinPulitzer. Favorites and retweets are the best way to say thank you if you enjoy the videos, so please do that. Have a great rest of your weekend and week, and cheers.